like as soon as Annalisa chimed in, like the thing ended with like as she was ramping up, and I was like, oh god, I hope she doesn't think that like I killed the meeting or anything.
No, no, we're live now. So hey everybody, this is a little informal. We don't normally like to do our meetings this way, but Comcast really sucks. I just want to spend the time that we're waiting on people to join into this meeting to tell everyone how much Comcast and Xfinity sucks. They've been out all day. It's been terrible. I've got a website that I'm trying to launch this week, entirely dependent on this thing you might have heard of. It's called the Internet. Very important for websites to function. Got to have that. And Comcast basically decided to not Comcast today. They decided that they didn't like working. They decided they didn't like providing that internet to people. So yeah, so that's why we're starting this show a little weird today. I have my friend John Paris is with me. My friend George Cheedy is with me. Hopefully Annalise and Trey can join us again really soon. Um, yeah, I'm real sorry. Y'all, how are you doing today?
We're good. I'm good. I hope you're good.
Yeah, I'm really mad at Comcast right now.
Yeah, same.
Can't blame you.
Yeah, it's been so. Let me tell you how my day started. We're here to talk about GameStop. We're gonna do that. I'm gonna try to give Trey and Annalise a minute to jump back in. So my day started with thank God we didn't have virtual school today. My day started with my son going, "Hey Dad, the TV doesn't work," which is 5-year-old forward. The internet is out. So we basically yeah we had to do all that. This morning, so that was fun. And all day I've been on the phone with Comcast, telling them how delighted I am with their service, their lack of service. The only thing that could have made this day better is if somebody had stood outside my window with like a leaf blower for 40 minutes, and then somebody else, like another neighbor, had another leaf blower, or like if we had like a leaf blower convention and some jackhammering going on. That would have improved my day probably. But yeah, so we're here talking about GameStop. We lost, unfortunately, thanks to Comcast. We were not able to get all the full guest contingent in here. So right now we have John Paris. John Paris, how are you, sir?
Doing good.
And George Cheedy, Decaturish columnist George Cheedy. George, how are you, sir?
I'm fine.
Great. Thank you for joining us. So, real quick, who wants to break down this GameStop stock controversy for us while I try to get some of our departed friends back into this conversation?
As we were discussing before, I think there's actually like a divergence of theories about how this is developing. George has a good one.
Go for it.
So let's set the stage first then. I will be brief. Like GameStop, and we're amongst friends, so I'm just gonna say it. GameStop is dog shit as a stock. It is, I think, personal opinion, like because Steam is killed going into a store and taking the CD and coming out and buying putting it in your PlayStation. You download your games. Most people.
Okay.
One analyst in Massachusetts said, maybe not. GameStop's got enough money coming in to reinvent itself in some way, and maybe they'll figure out how to do in-store gaming as a contest thing, and retail is dying, but if they can make it a destination. He had a theory, a theory that isn't completely trash, to say GameStop isn't as bad as Wall Street says it is. And so he puts out his thesis and says, yes, come buy GameStop. And Reddit gets a hold of it and says, we don't like big hedge funds that are shorting stocks. To hell with those guys. We're nuts. We're nuts. We're nuts. And buys the stock, even though they know it's going to go down, as a protest, saying, we hate hedge funds. Hedge funds are going to make money off of this retailer dying and putting people out of business. To hell with those guys. And over the course of a period of time, stock rises from $2.50 to $4 to craziness. And at some point, like Reddit hive mind lost their entire mind. Everybody starts buying in on Reddit, and it goes from $4 a share to at the top $400 per share, even though
or 2069.
ah,
Yeah.
ah, even though like the intrinsic value of this company, like if you were an analyst looking at it, you'd say it's worth 600 million, something like that. $22 billion they say it's worth because of the share price. It's completely divorced from reality, except that there's so much short interest. So many people had shorted the stock that they were trying to induce a short squeeze where people have got to buy the stock in order to cover their short so that they don't end up paying 50 times as much as it's actually worth later on, or more. So have I given a basis for this for discussion that makes sense to all of you?
Makes sense to me.
Yeah.
Okay.
Annalise, how are you? Thank you for joining us. So sorry about all the trouble. So tell us a little bit about your connection to this story. You've been dabbling in some of this trading action as well. What's been happening with your side of the story?
Yeah, so I come at this from like someone who does trade on Robinhood and Stash, or at least, I also have like a Fidelity account that I've kind of moved a little bit more toward it. But, I'm somebody who basically, when I go to the bank with my like no family inheritance, no big, money going on, even though I have like no debt, no nothing, I'm doing it all right where I should be in my 40s. They look at me as somebody with just a couple $1,000s to invest, and they say, "Oh, bless your heart, sweetheart. Come back when you've got at least 25 grand, and then we can have a conversation." And for someone like me, that's just not realistic. And the apps, even so, much as like a few years ago, were an opportunity for someone like me to buy into partial shares. They were an opportunity for someone like me to learn the ins and outs of investing, to get my feet wet, and to kind of see how it goes and kind of try my hand at some strategies. And then now, because I've done that, I can go to a Fidelity and I can go. Even today, I got an email from Chase again asking me to switch platforms. They see the debits going out to Stash and Robinhood and Fidelity to fund some of my investment accounts, and they want in on it, but they didn't want in on it when I only had $2,500 or $3,000.
So who should I root for? So here's my thing. Like, I don't know that I just love the people that inhabit Reddit always. I mean, sometimes they do cool things, sometimes they annoy me. I really don't like the people who constantly play games with my retirement account. So who do I root for? Who is somebody who isn't gonna? I'm never gonna day trade. I'm never gonna do any of that. I'm not real up on this the way that y'all are. Who are the good guys?
There are no good guys. There are none.
Yeah, and good news, Dan. Like, your retirement's not affected. Like, GameStop is not in your retirement portfolio. Don't worry about it.
Okay, let's
good. Yeah, like most folks ought not to worry about this like insane phenomenon. I want to go back to something that Annalise was talking about earlier about like Robinhood and these kinds of apps like letting people in. Like, I was like of two minds when Robinhood launched. That like my like finance guy brain said, well, these guys are like selling user data to try to take a bite out of the market makers. This is gross. This is like basically everything that everybody hates about Facebook and their business model. And I don't like it. But then like once they did it and it became a thing, all these other brokerages were forced to adopt the same model of zero commission trades, which like, I don't know. I think it's good for retail investors, but I'm not entirely convinced that retail investing is like a good practice for anyone to have. Because if you're not already maxing out your tax sheltered retirement accounts, then like perhaps like taxable accounts on Robinhood are not the best kind of investment you should be doing. But I'm also not I'm not trying to scold anyone or like tell them what to do.
I don't think it ever takes like the place of like meeting with a financial advisor or figuring it out. But I kind of see like here's the position where I come from is like when you go to a mechanic and, you know, it's a very confusing thing. I'm not an expert on cars. I may have dabbled a little bit in cars, but you know, trust is a really big deal. It's really hard to know who to trust. And especially like I'm coming at it from a woman. I get talked down to a lot by men in suits behind a bank. And I have been as a business owner, as an individual. And so I really don't want to be condescended to by a financial advisor over and over again, which has been my experience. And so before I go to a mechanic, before I visit any business where I am not an expert, I tend to do a little research, which is why I know if I go to the mechanic and they decide to charge me labor for changing my spark plugs and labor for changing the coil, I can say, hey, you got to remove the coil to change the spark plugs. So don't be charging me labor for both when you were going to remove the coil anyway. And so it's the kind of same thing, right? So for me, I see a lot of people saying like, you know what, it doesn't matter if you think I should put my money in a better tax shelter thing. I want to play my money in the stock market. That should be my choice. And so that's kind of how I see it. I'm not going to, you know, live and die by meme stocks, but I'm also not upset if people want to go in and manage the money the way they want to manage their money.
Yeah.
What are meme stocks?
Meme stocks like the GameStop and
GameStop is GameStop is one of them. AMC, Nokia. I got my my Dogecoin background up here. You know, these are literally stocks that are propelled by internet memes. Like the bid pressure on these prices are propelled by the popularity of these names on the internet. It's wacky.
Yeah, it's not like, you know, it's like the FOMO button. Like people suddenly want to be in on whatever the hot button, you know, stock is that's being propelled by the toxic masculinity on Wall Street bets and Reddit or whatever it is. They want to be in on that momentum. And, it's one of those things where you kind of want to be a part of the action. And I think like to this point too, anybody who tried to join Robinhood or tried to join Stash or tried to join one of these apps had about a 2-day waiting period if they weren't in it already, because you have to sign up, you got to wait to be approved, you got to, show your deposits went into your bank account to confirm that it's your account. So if they were looking to get in on it and didn't already have an existing account, they probably weren't starting until yesterday or at the very latest, a couple of days after the fact anyway. So there probably wasn't a whole lot of people who didn't have that cool down period from it to at least reevaluate if they wanted to get in or not.
I will say that I tried Webull very briefly just to see if it was still working. Sure enough, Webull wants users. They will cover your cash deposit.
Mm-hmm. The thing I worry about, so I am a paternalistic bastard. I recognize this. I suck. And when I say that, I mean, my Facebook feed started to fill up a week or so ago with people I know don't have a lot of money talking about, I'm going to buy some AMC stock because I saw somebody talking about it and I think it's a really good idea. And I'm going to make a lot of money. And I'm like, that's no, you have trouble making a car payment. Please don't do this. No. And which is, it's paternalistic. But, so there's a whole thing about trying to be good to the financial industry destroys poor people. It is out to fucking get poor people. And I see this all the time. People who have to put their car in hawk. And so they go to a title pawn place and they're paying the equivalent of 400% interest. And it makes me want to burn every single one of them down. And that's where I'm coming from.
I get that too. I grew up on food stamps. I grew up with a dad who lived in his car Monday through Friday and came home on the weekends because he couldn't afford to commute. I grew up that way. I definitely get that. I work for an NGO similar to you. I've worked with, I work in the nonprofit industry, and I definitely see a lot of really, good stories of resilience. But why is it that we only care about poor people and their money when it comes to things like the stock market or how they access their food benefits or all these other things? We don't care about the fact that they're out, poor people are funding the lottery or poor people are out there gambling or funding the casinos. So why are those industries
funny you say that to me, regulated? But I mean, I agree with you.
And we're not doing it with the financial industry. And I think that people should have access to startup money. They should have access to financial learning. I wouldn't be learning any of this if it weren't for Investopedia and Susie Orman. Those were my things. I had to go out and find that information. Nobody wanted to teach it to me when I was a poor person. So I'm just saying, like, I totally agree with you, George. But I think, like, trying to say that this is the route that we go for empowering people in their financial services, you and I both know that there's so much more to it than that. And really, when it comes to like looking at like the hedge funds, which is risky as it is when you're looking at financial investments and financial literacy, like I get it, but they weren't jumping into this overnight and able to instantly, if there's somebody putting their car up at the pawn shop, they're not somebody getting approved on Webull with electronic funds transfers and easy access to their checking account to sort that through and start flipping that around in 24 hours. And I know because I've been that person.
Cash App allows you to buy and sell stock.
Cash App does?
Yeah. And that was the thing that sort of put it off the holy shit, because Cash App is very popular with Black people who are trying to keep their earnings from being discovered by the IRS. Like, just put it just flat out. Like, people pay each other on Cash App so that it doesn't hit a bank account that people can see. Like, that's it. And so I'm thinking, fuck, all right, like all the vestigial Series 7 training about protecting investors starts to kick in, and I'm like, you can't do this. What's wrong with you? It was a good idea 3 months ago. Don't do this now. You're going to die. Which is, yeah, it's awful. Fine, I get it. Then I started to look at what was actually happening here and the level of protest and what exactly they were protesting. This is the thing that John was mentioning before. I think that it is possible that this experiment with GameStop will expose a practice that is illegal that is occurring amongst the brokerages and the institutional investors, that they're lending out shares more than once. They're lying about how many shares they have and lending it out 2 or 3 or 10 times, because the interest rate that you could normally make in banking right now is like 4%, 5%, like, because the prime rate is 2 and the interbank lending rate is 0.
Yep.
But you know, the rate you get on a regular short stock, if you lend it to somebody, is 18% right now. Like, for the GameStop stuff, it's 50% because the demand is so high. And I think that if there are enough people who aren't institutional investors who own GameStop shares, that the folks who are short will have a real problem finding legitimate shares to go buy. And it will, like, they're saying it'll go to the moon. It'll be $10,000 a share. I'm not sure that's going to happen. What I think is going to happen is that the SEC is going to stop trade. They'll say there's been a market manipulation, that the market makers were violating the law, and they will halt trade until all of the trades are unwound. I don't know at what price that will happen. There will be massive lawsuits. I have no idea how they're, like, if this scenario is the case. And the thing is, we don't know that that's happening or not. It's reconnaissance by fire. It's somebody willing to throw money downrange in order to find out whether or not this is happening. And in that regard, like, all of my Occupy Wall Street stuff kicks in. Like, I'm like, yeah, okay, that's worth lighting that money on fire in order to find out. Like, it's worth it because it's the only way to get at it.
I agree with, like, definitely at least half of that, which is that we don't know if that, like, that double short thing is happening. We should assume that it is, though, because it always is. And when I was getting my degree in finance, you know, like, one of the first things that I learned when I was kind of, like, learning about, like, this short trade thing, I asked my mentor, like, well, what's to stop someone from promising the same share to 2 people? And he, like, grabbed my shoulder and was like, John, this is, like, the entirety of my experience in the 1980s, like, on a trading desk. It was like everyone was, like, lending to multiple people on shorts. It was the most insane shit you've ever seen. and like, and I was like, well, aren't there regulations? And this is like where I like kind of like walk back from your analysis, because like I think it's cute that you think the SEC will do anything. They definitely will not. Like,
But I think that's part of the reason that Citadel ended up lending money to this firm that was super short.
mm-hmm.
If they think that they were going to get caught out, like the thing they want to do is keep a margin call from occurring, so that they aren't forced to buy back the shares. So here's $2 billion so that you don't have to cover the margin call. I mean, I thought this was all sort of nonsense until I connected that $2 billion lending to Robinhood's restriction of share trade, to the fact that there's when you can't redeem stock short, like when you've got to buy it back and you can't find the share, if enough of that is happening, you go on a list. And if it's called the Regulation SHO list. GameStop has been on that list since December 8th, consistently. Like, this is day 39. Normally there's supposed to be an SEC action at 13 days, but that hasn't occurred yet. And I don't know why. Something is fundamentally wrong here. And which is why I took all of my money out of the market 2 days ago.
Oh, sure. Yeah.
Because something is fundamentally wrong here. And I don't know how it's going to ripple out.
I think the reason that there hasn't been a lot of action is just because it's GameStop is small ball. It's there. There's not like all of the action and all the attention is on it just because of the cool graphs where it goes up and then down, and isn't it crazy? But it's not that much money, in the grand scheme of things. And so I think that's why regulators and it's why nothing is happening. It's why nothing is actually stopping or moving about it.
To that point too, I think that in general, the Wall Street and the analysts are underestimating just how insane the Redditors are about holding this stock. You look at the one dude, Deep Effing Value. I'm gonna watch my mouth since my niece and nephew are watching tonight. He posts his every day, his thing. I mean, he's gone from he's been holding this stock long since 2018, and he's up 33 million from a $30,000 investment overall. And that's after he's lost millions in the last week from, not selling when it was at its hottest on the 29th and 30th. But I think Wall Street underestimates just how badly now people want to stick it to these hedge funds. And we're looking at billions and billions of dollars of loss, and every billion creates more, diamond hands, as they call it, sticking to the man. And I'm not going to lie, I'm part of that. I don't own tons of this stock by any means, but I'm just saying I'm rooting for that. I'd like to see this crack a few heads on Wall Street. I'd like to see Wall Street, suffer a rap on the knuckles for this a little bit, or at least have somebody like Elizabeth Warren more motivated to take a look at it and say, hey, what's really going on here? Or AOC, who had her Twitch last week saying, hey, let's talk about this. This is actually quite relevant. And if nothing else, I think that it's gotten people, who maybe are curious about it or have never wanted to touch it because they don't want to understand trading, or they don't want to get involved because they think it's a little bit weird. It's gotten them more interested in saying hey, these people are sticking it to someone. I want to stick it to someone too. Or maybe they just want to dabble and see what it really is about. And I think the more the general public understands about this looming in the sky, crazy world of trading that requires math and all this skill, and it's super complicated, and therefore I don't even want to know what's going on. It's making them more interested in at least the regulation of it and what's happening in the market. And to me, having those discussions, even someone like me who isn't a big player, who isn't curious, I'm having these discussions with friends and family that I've never had before. And that's a really good thing when you get people interested in what's actually going on and why it's important to them. So that's a win.
Can the poors actually do a capitalism? Are we allowed to do that or not? I'm not sure, because it seems like there are different rules that apply when people on Reddit try to do something than apply to when people on Wall Street try to do something. Am I wrong about that? Is that a misread? Somebody help me.
No, like the boards are not allowed to do a capitalism. I don't know if you've read Capital Volume 1 by Karl Marx, but like it's explained pretty explicitly. Like no, like you can't. Like capital is one thing and you're another thing. Like
Gotcha.
Yeah, and like we saw it with the hedge funds, which are, a little bit different. I'm not like a master investor, but you look at hedge funds run a little bit differently than what people think of when they think of like mutual funds or like, everything else. They're inherently a little more risky and they come with their own different rules. They're even less regulated than many of the other options. And, they effed around and found out. That is exactly what happened. They didn't think that a bunch of like machismo, testosterone driven Redditors were watching the shorts and were watching what was happening and talking about it. And they didn't pay attention to that. And then when this happened, all of a sudden they're out of billions of dollars and more, I was watching it unfold on Reddit last week. Like I couldn't stop refreshing and reading what was going on and watching the frenzy and just kind of seeing it and watching the speculation and just being, entertained while it all kind of unfolded. And nobody expected it. And they didn't expect it because they do it all the time and nobody's ever noticed. And that's really what it kind of boils down to is, all of these people get away with it for so long. And there's only so many times you're going to get your hand in the cookie jar before it gets slapped. And they got slapped. And now they don't know what to do with it.
What I want to see come out of this is a new sort of movement towards shareholder activism. And when I say that, I mean, okay, so this may win. They may win or lose here. I don't know. I hope they win. Like, I hope that you get this Reddit army that knows each other and has this circle of trust because of they've got enough karma so that they know that they're dealing with real people and not bots and like a comment history. A group of people who can turn like a pirate ship now and go say, all right, so let's not do the short thing again because that was once in a lifetime, but say, here's this company that we think needs to get fucked and buy it. Like as a shareholder group, just like Nestle. Like nobody likes Nestle. Fuck Nestle. Like they steal water. Like everybody hates Nestle. Like, so Reddit going, okay, we're going to band together as an army and we're going to buy a controlling interest in Nestle. And then we're going to put all our guys, a bunch of Redditors, like, with cartoon lapels, I don't know, on the board. And we're going to tell Nestle what the fuck to do. Or something like that. Like, I'm picking Nestle out of my ass because it's Nestle. Like, and Reddit's got a hard on for Nestle. They fucking hate Nestle. Like, as well they should. But pick a company that you think is just scum. And just buy it. Buy it and fuck it up. Or buy it and make it right. I don't know. Like, put the, like, where the morality of the public is reflected in how the business operates because they brought the capital there. That's where I think this goes. Like, I just have but there's no, how do you tell Reddit with, like, I've got 2,000 karma. Nobody's fucking listening to me. Like, how do you tell Reddit, okay, you've got something here. See them, fuck them, and make it happen. I don't know.
So we have a question from, I think it's from Laura Oliver. She asks, what are the obstacles of a group of, say, Redditors from buying a public company outright? What would be some of the obstacles for them doing that?
Capital. Like, they don't have enough money. Like, that's it. Like, they don't have the cash. You need millions of dollars to buy a company.
Collectively, they might actually have millions of dollars. It depends on the company. It also depends on whether or not there are enough shares. No. It depends on whether or not there are enough shares that could be bought on the market in order to buy a controlling interest without screwing yourself by driving the share price up so much.
I mean, what you're describing is like a hostile takeover, right?
Yeah.
And you need quite a lot of money to do that, like in a very, very coordinated effort. I would love to see that. I would love to see like some random small company, like Sherman Williams or whatever, like a regular company that like does nothing or whatever, like, but like that would be cool, like a hostile takeover of Sherwin-Williams. I'm down for that. Like, I got 5 on it.
I think you also like, I don't know what you all, but I really hated group projects as a child. I still hate them as an adult. And like, even now, like you've seen how it is when you work on in any industry, how hard it is to get people on the same page sometimes. And I think of my sister who's like a really experienced project manager and the cats that she has to herd. And I'm like, there is no way if like she can barely get functioning, like good people on board. There's no way that somebody else herds enough Redditors with this much capital on board to all like swim toward the actual goal and stay on task. There's just I can't see that happening. And I think, for Laura's question too, though, what we do see happening is we see a lot of big companies or corporations that do have millions that then go in and take over or swoop up and they buy all these small, investor projects. And you see that with other organizations. And that's when you start getting, where Google's buying Fitbit and then this company is buying that one. And it's happening. It's just not happening with individual investors like, peons like me.
So another comment. They might have enough if they get it together. Also, they could use crowdfunding. Can we GoFundMe to buy Nestle? Can we do that?
Definitely
Sounds
not.
like a project for George. He needs another project.
He's not a busy man at all. He's never busy. He never has anything to do. Never has anything to write for me that might also be late.
The scale is wrong. No, we can't buy Nestle, guys. Even if we try real hard.
Nestle's off the fucking chart, but I'm thinking like something smaller.
Couple zeros missing. From that plan.
Convince them to invest in a little startup called Decaturish.
I was going to say, could we all pool together and when's Decaturish going to go public? When's your IPO?
Let me think about that. Never.
There are some smaller companies I bet they could, how about a small insulin provider? Like something like that, like $100 million. Okay. Like I actually think they could put $51 million together in order to do that. Like at this point.
Yeah, I think so. And maybe you can steer it towards more ethical objectives and not just win moon. I don't know though. Like like the people we're talking about, if you've ever been on Wall Street Bets, it's not good. Like the mood there is not good. Like
it's very toxic. And I think like it's worth throwing it out there that community started as like a place for people to show off how badly they messed up. Like that was, I don't think a lot of people realize it, but that community started as just basically, for lack of a better word, failure porn from the stock market. And it's not like a place where you go for learning and getting these like inside tips. It's definitely a show off place where you show just how much money you lost. So anybody who isn't familiar with that needs to know that that's definitely a place not to wade.
Financial advisor Trey Bliss has been able to rejoin the conversation. Sorry we lost you for about 30 minutes due to again, I want to say this show was not brought to you by Comcast. This show was brought to you in spite of Comcast and Xfinity. I want to make that point repeatedly to everybody I can find today, maybe loudly on a street corner at some point later tonight. I am real mad about that. Trey, what's your take on this situation? I know you're kind of jumping in late here, but I know you have some words and thoughts and opinions about this.
Well, I missed, I guess, most of the discussion, but I think what gets lost in the broader scope of what's happened is, I guess, the phrase "the casino always wins," meaning that Wall Street is always going to kind of be on top in all of these type of situations. What I take issue with is Robinhood, the app itself, which I think was the transmission mechanism where a lot of this took place. And there was, again, I don't want to say sloppy or poor policies in place, but because Robinhood is free to trade, Robinhood's customers are not the people that are placing trades. They sell their information to other hedge funds with order flow. So that's who Robinhood is beholden to, are the hedge funds that they're selling the order flow to. And I don't think it should be lost on anybody that Citadel, which is the hedge fund that bailed out Melvin Capital with $2 billion, is Robinhood's biggest client for order flow. So what these hedge funds do is they find out the orders you place, they put it in ahead of you, and they're essentially then selling you the shares at a higher price. That's why the average holding time for GameStop last week was about 40 seconds, which is, when you talk about day trading, you're now talking minute trading, just because how fast everything was moving through these high frequency trades that take place. So with Citadel bailing out Melvin, the company that was then short the largest percentage of GameStop, it's all an inside game to where they weren't going to let one hedge fund go under. It was essentially Citadel saying, all right, sorry, we kind of screwed you there. We don't want you to go out of business, even though I think they were down over 30% last month. So it's an inside game. George and I were speaking earlier. I sent him a link over Twitter called The Casino Always Wins, about how all of this kind of took place and how do you get to 140% short. There will be congressional hearings, but I think what comes out of this is that you've got to at least put restrictions on order flow trading that takes place. You can't just allow other hedge funds to be essentially front-running the public. That I don't think it was the public that was taking down GameStop. It's other hedge funds that smell blood in the water.
Anybody have any thoughts on that?
Well, I have go ahead, John, and then I have a question for Trey after that.
Okay, cool. Yeah, I was just gonna say that, Trey, I'm glad that you rejoined this conversation, because I said something earlier that, like, I was very concerned when Robinhood launched that, like, these people are just taking a bite out of market making, and, like, that's not value for anyone. Like, that's not value for traders, you know.
Well, I think it's for the average person that's looking to get in to do 1 to 5 shares and kind of get involved with Wall Street and maybe then get a passion. I think it's a great thing. How I got into the industry was, I started officially in 2001, but I was a finance major that changed my major in 1996 from finance to music, because I got really bored with Wall Street and what was going on. And then what happened in 97 and 98, the tech bubble blew up. And all of a sudden it got really interesting to start paying attention to stocks. And that was what I then changed my major back 2 years later from music to finance. And if it brings in a generation of people that get excited about the market, get excited about investing, I think it ends up being a great thing, because financial education in general is considerably lacking across the board. If it turns into where it's just this beanie baby phase, to where this is the new bubble and this is the new fad, like baseball cards or something like that, then I think it ends up doing more damage than good.
Annalise, you had a question?
Yeah, my question for Trey or anyone else too is, like, you talked about how there would be congressional hearings, and we'd be looking at, like, the way things are traded, and something that's been batted around a lot on various places that I would love to know some thoughts on are just, we talk about this all the time. You can't sell a car that you don't own. You can't sell anything that you don't own to someone else. So why are these hedge funds then allowed to sell something they don't own and move it around and come back and make money off of it? Like, I can't do that with anything else. So why is that something that's allowed, and why isn't that the part that's more regulated than anything else? And I've heard that kind of, different answers, but I think it's a good question for the rest of the panel.
Sure. So hedge funds that are basically short only funds, They serve, I think, two valuable purposes. One, who was it that exposed Enron, Tyco, WorldCom, all of the frauds? Those were short funds that said, hey, something fishy is going on. And these are the people that are leading. It wasn't the government regulators. It wasn't people that were just trying to find something wrong. It's people that said this is a fraud, we're going short and putting out research. They also then provide liquidity within the system to where every time somebody buys, somebody has to sell. And if you're not having somebody on the other side of that trade, you have short sellers out there saying, hey, I think this is overvalued. Let's bet against it. Less than 10% of the market are short-based funds, so it's not this large piece of the traders that are out there that are just going short. But that's why the risk of being short is unlimited, and that's what we saw with GameStop. That if I buy something, I know my loss is I'm going to zero. If you're short, your loss is infinity because you could be short at $10 where a lot of these funds were. And when that goes to $500, you just lost 300% of your investment. So the risk is always on the side of the short seller for what they're doing. And that's why usually the short funds that are out there are really good at what they do of exposing fraud, of exposing Lehman Brothers and Bear Stearns and companies that in the financial crisis with Enron and WorldCom and Tyco with accounting issues. GameStop, it's an easy target because it's a mall-based retailer. I call them the blockbuster video of 2021, to where I think none of us think GameStop's going to be around in 5 years. Just the mechanism of buying video games, you download it, you don't necessarily need to go get the physical copy. So I understand why they were short, but sometimes you get a little greedy with the short positions and how this kind of unfolded. It left them vulnerable to a short squeeze, which happens all the time. The other thing I would say is that a lot of people were complaining that the rules got changed mid-game when restrictions were put in that you could not buy GameStop on certain platforms. And this happens time and time again. I advise you to go back and Google Piggly Wiggly, the CEO of that company, that he had short sellers out after him and he tried to force a short squeeze. And the rules were changed on him. He was the one that ended up going bankrupt. The Hunt brothers in the early 80s, 1980, where the movie Trading Places was essentially based off of with Eddie Murphy and Dan Aykroyd. It didn't end well for the Hunt brothers, just like it didn't end well for the, I forget the two older characters' names. The rules get changed in the exchanges. Back in 2008, when you were trying to short financial stocks, the government then said short selling in financials is now illegal. The rules will get changed because at the end of the day, they're going to make sure that the system is intact.
I howled so loud in 2008 when they banned short selling on financials. Like, I thought that was,
Well, it didn't do anything.
Like, say that again?
It didn't do anything. It was a token gesture because they continued to drop.
Yeah, they continued to drop. In fact, there was a study that said they dropped harder because they were shorted. There was no short action.
Yep.
Like,
Because you didn't have the other
absolutely.
side of the trade, because nobody was then, you didn't have that short squeeze to then cause a buying panic in the process to where there was good news.
Right.
So
Incredibly frustrating.
Somebody bring me up to speed. Where is the current situation with GameStop stock? It's down again, isn't it? I mean, like I said, I'm total layman.
It was up about 2.5% today.
Oh, is it up again?
It's holding steady at about $100 a share. I mean, today was the least volatile day we've had in over a week.
It's still up big from any kind of reasonable valuation.
It shouldn't be more than $5 a fucking share. Like 10 at the outside. After all of this craziness, if you said GameStop stock was worth $10 a share, I'd believe you.
I-
Like, it's not, but
I would put it closer to 50 cents, but
yeah.
Is this a sign that there's another potentially larger financial crisis in the near future? Because I've seen headlines to that effect as well, that all this wackiness with the stock market is a portent of some deeper structural problem that's going to rear its head in the not too distant future.
I would give two examples. One, back in '96, Greenspan warned of irrational exuberance in the stock market, that evaluations were getting extreme.
Yeah.
And you had to continue for another 4 years. That nobody knows when the time is that kind of the music stops and you're doing the musical chairs to where you say, okay, who's left holding the bag? What I was concerned about with this was a repeat of what we saw in '98, which was long-term capital management. It was a large hedge fund, short the Russian ruble. You had the Thai baht currency crisis, and all of this means nothing. But when a large hedge fund got caught on the other side of the trade, the Federal Reserve had to step in, dramatically cut interest rates, and essentially forced Wall Street to bail the hedge fund out, which I think then led to the bubble really blowing up in tech in '99, in late '98 and into '99. What I took away that I felt good about was that night, Robinhood was able to raise $1 billion in capital. Melvin Capital, the hedge fund that was in trouble, raised $2.75 billion overnight. So Wall Street is somewhat policing itself to where they don't need the Fed to step in. And as long as you have that, I don't think it leads to kind of the dominoes that fall to where it leads to a financial crisis. Because remember, in 2008, it was Bear Stearns that was sold for $2 a share in February, and the shit didn't hit the fan until September. So you had 7 more months of just cascading events: Fannie Mae, Freddie Mac in June, July, Lehman Brothers in September, and then the whole AIG bailout fiasco towards the end of September. So these things often happen in slow motion to where you'll see, it's not just like it happens overnight. There's several different phases. And I, so far, think this was just if you remember the fat finger flash crash that we had in 2013. Again, sitting on a trading desk that day where you're seeing the market drop 1,000 points in 3 minutes without any reason why. And I'm trying to figure out, did somebody launch a nuclear bomb? I mean, why is the market doing this? It turned out somebody had put an extra 1,000 futures, or sorry, million futures contracts in, and it was a fat finger trade that just caused the market to crash that day, and it had recovered 20 minutes later.
Anybody else?
I'm a perma bear. Like, I'm awful, and I accept that. Like, I have a degree of skepticism about the resilience of markets that has usually been wrong. So bear that in mind. We're overdue, and overdue in the sense that I would have figured that what happened in March and April would have been continuing today. And the idea that the stock market is valued higher today than it was a year ago is senseless to me. It does not make fundamental financial sense. And I've been attributing this to things like the Fed carpet bombing Wall Street with liquidity, and quantitative easing, and sort of implied interest, or not interest, but implied inflation because of government spending. But sure, the stock market is worth like 10% more than it was a year ago, give or take. But that's because the implied value of a dollar has fallen 8% or 10% or 12%. And we simply have not seen the inflationary pressure. So it's not so much that I think that there's a stock market crash that's coming, like what I'm expecting is a return to double-digit inflation, in order to make up the difference here. Like, 'cause I think Wall Street is going to do what Wall Street's going to do, but the real economy is still the real economy. There are X number of people and Y number of mouths to feed, and how many acres of land do you have to farm, and how many like gadgets can you have people building in order to make them? And like at some point, reality reasserts itself. I'm not sure it's a stock market crash so much as an inflation bubble bursting, probably around trade. Like if we have a sustained and difficult sort of trade problem that emerges with China and India, that is not easily resolved, I think that's where you get your 10% inflation that changes what the stock market looks like.
John?
Well, I feel like Dan had me on because I was going to say some things that George already said, but lots of metrics are flashing, pretty alarming signs to me. The most alarming one to me is that the publicly traded stock market is worth about twice as much as the American GDP. This doesn't seem good or sustainable to anyone. It's obviously not sustainable. So either the GDP can increase quite a bit, but we're in a forever low GDP growth environment. So I don't know how that happens. Look at valuations versus earnings over the last 10 years. They are sky high. These valuations are very dangerous in the stock market. People are buying stocks thinking stonk go up, right? Just buy stocks and stocks always go up. Sometimes they don't. The most sobering thought that I've had in the last 10 years is that no one who was born before 1980 has any fucking clue what a actual bear market looks like. All right, everyone born after 1980 thinks stocks go up, stock market go up, and that's how you do, and that this will always be fine. But got to inform sometimes stonk go down, and you will have to deal with that. My own investment portfolio is mildly conservative, mildly boring, but it is around the idea that these high flying stock prices are not going to last forever.
So Laura Oliver asks, what market segments in particular are showing signs of gross overvaluation compared to earnings?
I wouldn't actually describe it as sectors. I would describe it as specific companies. Tesla is Tesla is a very good example. Tesla went up.
Isn't Elon Musk almost as rich as Jeff Bezos? I was reading this.
Richer.
How?
Richer.
How?
For no reason at all, and it's all in your retirement accounts, folks. That is a alarm bell to me that a company with no earnings ever, it's a car company that sells cars, but they don't make money selling cars. They make money selling carbon credits in Europe. Whoopsie. And they don't sell that many cars either. They're 0.5% of the entire car sale market, and they are the biggest car company.
They're more valuable than every other car company in the world combined.
Yeah, almost, right? The top 20 car companies combined behind Tesla are not worth as much as Tesla. And this just got inserted into your retirement account, and you didn't even know it. No one even knows that Tesla just got inserted into their
because it was included in the S&P 500. That's what John.
Exactly. They got included in the S&P 500 index, and all these people who are invested in index funds just accidentally got invested in this insane bubble stock. And it actually turns out to be like a large percentage of their retirement portfolio, like much more than they would be comfortable with if you actually explained it to them.
That's an example of another stock that got a lot of like love from everyone but Wall Street and just took off. You know, Tesla is a good example of that too, because nobody on Wall Street said exactly what you pointed out. No earnings. This is ridiculous. This is not at all what, and it just took off because other people who don't do this decided to go crazy with it.
Well, again, it was a heavily shorted stock.
Yeah, exactly. And so like, it's one of those other things that nobody on Wall Street predicted would get to where it is now. And Elon Musk being Elon, and, you know, this big persona that people just assume because he's one of the richest people now in the world, it must, you know, be like that. And, you know, I have some Tesla stock that I bought through an app, you know, through, I don't know if it was Robinhood or Stash, just a little. I don't own shares. They're super expensive. I don't own complete shares, but I can buy fractional shares on that. And that little buy before it split recently, you know, I'm up almost 300% of my investment. I'll take it. I'm not complaining right now, but as a long-term investor, I know, like to your point, John, like, you don't get into the game thinking that you're just going to ride the wave and stay at the top of the wave. If you're doing that, you're an idiot. You know that you have to, you know, it's like what everyone tells you about your 401k or what everyone tells you about investing for retirement, right? It's a long haul kind of thing. It's fun to dabble in like the fun, you know, little things, or, you know, make your strategic bets. I'm a strategy board gamer. I love strategy riddled things. And so I'm over here, you know, doing my research on different things and trying to figure out what I think will be the most interesting. But it isn't something that you get in and get out of in 3 months and assume you're just going to pop out the next, you know, Reddit millionaire. And I know that there's going to be a crash coming. I can't ride my current return percentages forever. I'm really happy where I'm at right now, but I know it's not going to last forever. And we're definitely going to see a dip soon, like everyone else has said. I think even with my limited knowledge that can't analyze like these three just did, you know it's not going to happen, and you can't ride the wave forever. But I do think there's some interesting things coming that will make interesting investments regardless of what happens. Like for me, I'm really excited about what's going to happen in the cannabis industry. I think there's a lot of really exciting things happening there.
As are we all.
Going to kind of see a lot of change, especially in the next like 3 to 5 to 10 years. I think, you know, especially with Schumer and some other Dems talking about legalization, decriminalization efforts that are happening right now. I think there's also, like Tesla was brought up, but I think there's some much more boring stocks, more boring companies doing far more incredible things in terms of, you know, clean energy and battery recycling, and looking at what's coming down the line for renewable energy, especially with this new administration. So even though things might be taking a dip or might be switching around, it's my unprofessional opinion that there's still some really exciting things happening if people want to get into looking at what they could be investing in. And I think like there's some really good ways to do that, even though you have to be of the mindset that this isn't going to be a one and done, get in and get out with your Beanie Baby investment. Deep cut reference from earlier for those of us who remember that craze. So it's kind of like one of those things. So even if there's a dip in the market or a bubble burst or whatever might happen, that's not to say that something interesting or some really cool investments couldn't come out of that going down either.
Trey, you got the least amount of time because you joined us late, so I'm going to let you have the last word before we wrap it up.
Okay, so 3 points to counter George and John, to where I will be bullish here, and reasons why I'm optimistic and bullish. One, yes, the Fed has essentially put interest rates at 0. For clients, I can look at buying a 10-year bond at 1% when we know inflation is going to be higher than that. So the Fed is forcing you to buy stocks. It's TINA, there is no alternative. Or there's not an alternative. So you're forced to be in the market as opposed to bonds because there's no return there. Second, demographics are destiny. And I'm a big believer in looking at demographic trends, that right now, the average American kind of bulge in the population curve is right at about 30 years old. The average age that somebody gets married right now is 30. The average age they buy their first house is right around 30. The average age that they start really building their career at this point is 30 years old. The last time we had this type of bulge in that demographic bracket was in the early 80s when you had all of the hippies turn 30 around 1980, 81, 82. And the market then went on an unprecedented run from 82 to 87, which the 87 crash, when you look at it, just looks like a tiny blip, even though it was down 27% in one day. So when you have this large of a percentage of the population hitting their prime earning years, hitting household formation years, creates a huge tailwind to the economy going forward. And I don't think that can be underestimated, meaning that while earnings valuations might be high at this point, the market might be looking ahead to where earnings for even a Procter & Gamble making diapers and stuff like that, that if we have a baby boom, unlike something we've seen since the 50s with all of the population right now in that late 20s, early 30s bracket, earnings will be substantially higher than they are in the next 5 years than they were the previous 5 years. Third, I think what COVID has done, it has, everybody compared us to kind of like the situation we've been in a 2% growth environment, what we saw with Japan, where you have zombie companies around. COVID is basically eliminating a lot of the zombie companies. And even though you've got your GameStops of the world, you've got, whether you want to put Macy's in or Express or mall-based stores, that have basically been allowed to survive the last decade because interest rates are low and money is cheap. It's forcing a lot of these zombie companies out. And I hate to sound like the uber capitalist here, but what you need is creative destruction, meaning these companies need to go away to create bigger and better companies in its place. And I think that is very underestimated right now, that having these companies that are dinosaurs that really don't belong to be in business go out of business creates more opportunity for the next group of entrepreneurs. So those are the three reasons why I think that I'm optimistic, and you're not going to see markets going up 30% a year, but can you have a continued bull market for the next 3, 4, 5 years? Yes. To George's point on inflation, yes, that's coming, but inflation is a slow moving dragon that takes time. It wasn't until 1968, you're talking 40 years after the Great Depression, to where you had the 10-year treasury go above 5%. That was caused from a lot of LBJ policies, guns and butter, you had the Vietnam War and all of the social programs going on. With all of the money that's being injected in the system, not only by the Fed, but with the increased borrowing we have, yes, inflation is going to be a problem, but it's going to take time to manifest itself, to where I don't see it being a year or two a year away. This is going to be 2, 3, 4 years. And it's going to sneak up on everybody, but yes, that will be a problem. The counter to that is, how does the US eventually pay off its debt? It's by inflating the currency, but through inflation, to where you're paying off the debt with cheaper dollars through inflation. That's how we're able to then 10 years from now get control of the deficit. Again, you want to see it happen overnight, and it's going to take years and years and years. At some point, the bond market's going to wake up, and you're going to see interest rates go from 1% to 3% to 5%, and it'll take 6 months to happen, and that will cause a significant correction in the market. But I think you're still 2 to 3 years out from when you see that. What'll be interesting is in 2 months, that'll be the year anniversary of COVID, where oil prices went negative, commodity prices crashed. So you're going to see the year-over-year inflation numbers spiking, to where you might see 3 or 4% year-over-year inflation numbers for the first time since the 1980s. And what I'm queuing on is to see how the market responds to that. Do they just look at it as a one-time event? Oh, well, it was because of COVID, it's going to pass. Or do you actually see concerns not only from the market, from the Fed, that inflation might become an issue?
So
And
that's where we're going to leave it right now. We thank you all so much. This is a really great panel, and I'm sorry it got off to a weird start because of Comcast specifically. But I hope you all will maybe join us again for a discussion down the road. I really learned a lot just listening to the four of you, and I think our audience did too. So bravo to all of you. Thank you so much for joining us and sticking with it. Our Twitch show is going to be back next Wednesday at 6 o'clock. We're still working on the guests for that. If you joined us today, we thank you so much for jumping in. It was a great show. I hope everyone has a great weekend, and we will see you again next week. Bye-bye, everybody.